So, guys, conscious of time, let's continue. Some very good submissions there, high quality. Yeah, the judges are going to need a little bit of time to decide on that one. Very sorry about the technical issues. Better than last year, but still had a few niggles there, so very sorry about that. Now then, moving forward with our panel, we have another fantastic lineup for you all. First and foremost, our moderator, all the way from London, Ed James, founding director of RCQ Associates, responsible for finding talent all over the globe, not just in the UK. Please give a big hand for Ed.
Thank you.
And today, on the panel, joining him will be Daniel Goudsmit, Business Development Lead from Hypoport, Hannah Sundqvist, Head of Private Credit at Moody's, Manoli, my fellow Helene, Treasury and Securitized Products at N26, and last but certainly not least, Frank Benamou, Head of SRT at Shane Capital. Guys, please take a seat.
Perfect timing. So, yeah, this it's hopefully been a really good last month for the hackathon, and I think we've had some pretty interesting entries. I'll just sort of kick things off rather than sort of going into necessarily further intros. So the opening prompt, we've seen teams build AI prototypes for structured finance in a short period of time. Before we get into the future, what did you see today that felt closest to real industry value? And I'll start with Daniel, if that's okay.
Well, I think that's important. Thanks. So sure, yeah, I think what's one very practical point. It's not always easy to go from idea, from a pitch to something practical that works in technology. So that's something you also see in other technology applications. But yeah, it is really interesting. It's to work in practice, really try to build something that's really something we at Hypoport prefer much more than building slides. So it's really nice to see people trying to build something, you know, being vulnerable with your product, putting it up on the screen. So I think that deserves a big compliment from yeah, from us to all the teams who put themselves out there. Yeah, and then interesting things. Yeah, I really like the last as well as the first presentation where you try to get sort of everything in there, look at building a deal, look at all the different roles, setting up maybe an agentic framework. That's really, yeah, a lot of piquing my interest, let's put it that way. And yeah, getting data in there, documents, yeah, and making sure that everything is compliant from a banking perspective. I think you should always start by talking about compliance, regulations, things are secure and safe. I think that's, yeah, almost where every presentation needs to start in our sector, and also end with to make everybody feel good. That's maybe very different than the hackers, but I think that's the bridge you need to take. So
compliance and feel good is two words which
yeah,
I
feel safe.
Feel safe is perfect. Manolis, any thoughts on this?
Yeah, I mean, definitely echo. First of all, thanks everyone for putting in so much effort, and yeah, I would tend to agree, probably, especially from a bank perspective. Yeah, I did in my previous role at a different startup bank. I did a securitization with, at that point, very limited amount of knowledge, and I definitely could have used some of these tools to just kind of have you know, a sanity, a teammate to make sure that I don't miss any covenants or miss any things. The audit tape would have probably been a bit better in the audit. The audit of the loan tape would have been maybe a little bit quicker. But anyways, you live and you learn. But anyways, I would have loved to see it. And actually, I think the first, second, and last, as far as I can remember, actually pretty close to something. I mean, obviously there needs some development, but it was actually pretty similar to something I saw in the conference. There was an AI, I don't know, prophecy, I don't know, something with P. Yeah, and I mean, give it another few months and you guys are there. I mean, I'm serious. Like, it's quite impressive. I did want to shout out the I forgot the name now. data center with a delay, the delayed information and kind of knowing. I mean, that's literally throwback to when the hedge funds moved closer to Wall Street to have information earlier. I mean, that could be hugely valuable. I mean, again, I'd love to see more details on that as well.
I'd love to see that crystal ball for AI and see where things are in the future. So moving on to sort of why structured finance is a good AI test bed. Structured finance has documents, loan tapes, rules, cash flows, covenants, and reporting packs, and many repeatable workflows. Does it make for an unusually good place for AI or an unusually risky one? I'll first direct that to Frank, if that's okay.
Sure. Thank you. So maybe I should say just because I have two hats here. So I'm a portfolio manager at Cheney, so a bit traditional. I'm also a co-founder on a startup called Tranchify that is in development about AI and technology in structured finance. And so to answer your question, it's a bit linked to what I do is, I think in my mind, anything that is highly repetitive, like there should always be a view on how can we use technology to kind of like help. And now with AI, we're able to go a bit step further, which is, it doesn't have to be exactly the same, but as long as there is a lot of communalities between the repetition, then there is something to do, right? So one of the things that I've observed is there's obviously a lot of startup and work on everything around data. So how do I filter data? How I do calculation? How do cash flows? And I think we've seen some example. So personally, what I like to do, but because I'm biased and that's kind of like what I do a lot in my job, is to think about everything around workflow, process, documentation, right? Which I think is actually not used that much. I think there is still a lot of assumptions that AI is way more for numbers and be like scrolling through a lot of data. What actually in my world of securitization, in you guys' world, is securitization is a very expensive exercise. It can cost like hundreds of Ks, like 300, 500K to document in terms of like what you pay to lawyers, whereas there's a lot of similarity between transactions. It takes a lot of time. A lot of the team, if you talk to all finance institutions, a lot of the team are completely swamped. And so they spend 3 to 6 months doing trade, whereas a lot of repetition. So one of the things that kind of like interests me a lot, and thing we do in Tranchify is how can we use technology to help draft and accelerate the execution of workflow in securitization, but also how to think about it in the fact that you evolve with financial institutions which have a lot of compliance, regulatory, legal requirements, and it doesn't really work to really give them a computer and say, yeah, I push the button and that's fine. They will expect some verifications, there is security, etc. But like in my case, for example, legal documentation, I can't really get rid of the lawyer. But the question is, can I use a lawyer to verify what I'm doing so that I'm doing a lot of their work, but ultimately they're there to more verify and focus on what may be extremely unique and different. So that's the kind of thing, maybe I'll stop there because I've been going a bit too long, but that's the kind of thing that I kind of like to see. I think like this, as we're seeing in finance, like right now, I mean, my observation, which I think is very positive for everyone here, is a lot of institutions say they do AI because they have Copilot and vastly go on ChatGPT and ask free questions. And I think we're going to move towards like more something where it's like tools that use AI but dedicated to a specific product or specific vertical. And I think people need to be taught how to use AI because most of them have no idea. And you need to kind of like give them something that in their hand on how do you use it, as opposed to, oh, this is a big chatbot, why don't you figure it out? Because none of them do.
I think if like for any tools that are available for structured finance and Tranchify being a key one, it's if it can save you time and add value, I think that's fantastic. And briefly on Daniel as well, any thoughts on that question at all?
Yeah, maybe to even zoom out a little bit, I think why we are in the business is to remove friction from a process that's basically about investing institutional money into, homeowners, consumers, cars, small businesses and large corporates, and making that process more efficient, leading to lower borrowing costs and a better functioning economy. And I think if we There's in this financing process, there are certain unsolvable problems with AI. So you're always going to need a lawyer. You're always going to need a rating. You're always going to, need certain things. But you can, make, I think, a lot more transactions if you can make them a lot more effective, efficient, make them cheap. Now you have to build a 1 billion transaction because of the cost of, let's say, 500,000 euro. Maybe you can do a 10 million transaction, but you can do many more if you have a process that's just very efficient. So that's basically my dream. Well, it's a very sad dream, guys, but let's put it that way, that's possible, and that different players can be in the market for structured finance transactions as well. So I think that's something to look out for in the next years.
We definitely like efficiency in markets.
Hey, Anusha.
So on to trust governance and the human in the loop.
Anusha, can you hear me?
Phase.
Hi.
What would make an AI
Can I
generated
ask you
credit
something?
or transaction insight defensible? Is it enough to show sources and calculations, or do we need a richer governance process around it? I'll direct that. I'd love to hear your thoughts, Hannah, on that.
Thanks. Yeah, and look, I think structured finance is a really good test bed for AI because you already have documentation, you have waterfalls, you have covenants, and I think from everyone's experience, at best, that document or that documentation is kind of semi-structured, right? At the same time, it's a very hard place to introduce AI into because the margin for error acceptance is very, very low. Because if you misinterpret any covenants or any clauses or you make incorrect cash flow assumptions, then that can have really, really bad follow-on effects, of course. So I don't think AI needs to get smarter, but it needs to get more trustworthy, really. Because, we've seen it summarize documents for so long, but much like you were saying, I think we're going to see it kind of coming in more from a workflow perspective. And that's a fundamentally different proposition. So if you look at something like, which we've seen some great examples of today, real-time operational data, the temptation there is to take every new signal as information. But that, from a credit risk perspective, is quite a dangerous thing to do, right? Because one of the enduring lessons that we've seen in credit risk modeling is that persistence really matters. So if you have a week of bad numbers, that's rarely going to predict defaults. But if you have constant or persistent deterioration, that's where you will see that risk. So I think the challenge isn't whether we can collect more data, but if that additional data helps us distinguish between just temporary volatility and more structural deterioration. So the real-time data should become evidence and not automatic action. I'm very much a believer in human in the loop because what you see there is AI, I think, is becoming very good at processing information. But if you look across all asset classes, not just structured finance, the highest stake credit decisions are rarely information problems, they're judgment problems. So if you look at a ratings process, we would look at, and I should add, I don't work for Moody's Ratings, I work for Moody's Analytics, but we look at, credibility of management, you will look at sponsor supports, you will look at amend and extend. So those decisions carry accountability, and that accountability needs to be human-led. And that becomes even more important a challenge with the higher degree of sophistication. So when you're looking at things like embedding, when you're looking at foundation models or autonomous agents, if that model performs well, but it's difficult to explain, the first question for me is not going to be, oh, can you explain it again? It's going to be, can I trust this? So I need to understand whether it's stable through time. Does it work well across sectors and vintages? Is it predictive during stressed periods? Because credit models aren't validated because they can explain the past. They're validated because they can explain or they can deal with a future that doesn't behave like the past. Bringing that kind of back onto governance, I don't think citations and back tests are enough necessarily. I think they're necessary, but they're not sufficient because if a system based on AI recommends a credit action for me, I want to know where did the info come from? Is it supported? What are the drivers of this? How has the system performed historically? And also risk committees will care about auditability, right? Because you need to understand reproduction of the results, tracing the various data, etc. So I think structured finance has always been an evidence business. Every investment decision that a GP and LP makes, every rating or every model validation decision needs to be backed by evidence. So I think AI won't lower that standard. I think it raises it, if anything.
Yeah, I think accuracy data, real-time data rather than sort of static pools. I think it's just there's so much data out there as well. Frank, I'd love to hear your thoughts on this question.
No, so I agree. I think, to be fair, I think AI hasn't reached the point of trust where you have to understand something, which is traditional financial institutions are probably the most conservative institution across the board, right? Because they get hit by regulator as soon as there is a mistake, they get fined, they have reputational issue. So all of these institutions, and particularly banks, are paranoid about security, about errors. And so we haven't reached the level of trust in AI yet, at least, where kind of like institution needs to, we rely just on something that out of the box gives you a number and thank you, I'll take it, right? That's just not happening. So I think the right way to think about it is AI is here to do a lot of the work, but will have to be verified by someone. And maybe when we reach a certain stage where it becomes so good then that human verification start to disappear or being reduced a lot. But then what will happen? Also, all these institutions are regulated, so they have a duty of they have fiduciary duty. They have to check that so for example, like you work in an asset manager, you have a duty to make sure you manage the money of your investor in the right way. If I put it to an AI and does something wrong, I'm in breach of that duty, I can be sued, right? So you have a lot of legal and regulatory requirements. And so, and it's going to evolve, right, as AI and the various tools become better. But for now, it's not the case. So I think now, and unfortunately, I have to say, like, a lot of people are not particularly techie in finance industry. They read about hallucination, about this and that, and they're like, oh God, hallucination, as if the AI is wrong, like, half the time, which is not the case. But so we need to kind of like overcome a little bit that doubt. It just takes time. That's all. Be patient.
I can see it being kind of us all learning from issues and errors in the system, and hopefully the baseline issues are not going to be too bad. Panelists, finally, any brief thoughts on that side?
Yeah, I mean, I'm one of those bankers and I am paranoid. No, but in all honesty, obviously it's giving us a job, regulators and regulation. So we will always, I think, have to be there. I think it's been all said already. It's we have to go in front of credit committees, and if we cannot explain in human words even if the AI has a formula that makes sense, and the waterfall, we can look at it and the covenants and everything. And if we don't understand what it is, in the end, we need accountability, and I don't think at this point we're not ready to say that AI is a human being that's accountable. So I mean, maybe I've seen some futuristic movies lately, but we're not quite there yet. So I think
it's constantly evolving, isn't it? It's amazing to see. So as a structured finance focused headhunter, I look at the people side of things, and I see sort of how talent pools are evolving, and I see sort of what's being desired. That crystal ball I sort of touched on earlier, it's like I think AI is evolving so fast, it's so hard to say. But if I just talk high level, if we talk about job descriptions, if we talk about what employers are looking for, if we talk about what people are thinking that they need to do, I think kind of some of the key skills that you need to be thinking about, obviously in this pool, we're talking about sort of AI and quantitative and data science and engineering backgrounds. Okay, that's great, but it's like, how can you use it? How can you get that data, see it, and actually interpret it, analyze it, and be able to provide that right advice to investment teams, to like the market, if you're providing data to external people. And I think being able to understand, interpret, and communicate it in the right way, I think that's where it's going to need a human. Just like I think pretty much everyone has talked about, where you're going to need a human there. The ability to also understand like the accuracy of data, and actually is it right, and that is, are you using the right data pools? And I think it's also like, this is where people with investors, you'll have your edge, because you might choose the right accuracy, the right data pools basically, which are best, you feel are better to accurately reflect the market. And if I ask a question to the, and this isn't open to anyone who wants to get hold of the microphone. Daniel, it's not just you. So what skills become more valuable if AI handles more of the extraction, drafting, comparison, and first pass analysis? Who would like to answer this one first?
I'll go. Yeah, I think, but look, we hire technology people mostly, and also the people with financial backgrounds. They also always have to do a lot of programming, or let's say not programming, but you have to have technical skills. Yeah, what's going to change a little bit, I think, in that sense, is that people who couldn't write code before probably now have a bit more, tools at their disposal to write more code. Is it going to be good code? They cannot judge it really, so you need in the end also some people who can actually really write code. So those are going to be experienced developers. So it's an interesting discussion. Also a discussion to have is, okay, how much are you going to pay somebody and how much credit are you going to put extra on top of it in terms of token use, for instance? Also something to look at. Something very popular to talk about, I think mostly in the US, is burn as much on tokens as you can. So that's also an interesting perspective. If you hire someone but don't have that discussion, yeah, I think that can be expensive. So it's an interesting one to within a changing market now to really look at those things. Yeah.
So I guess it's kind of like, actually you can have in this ecosystem, you've got the kind of quandary if you can have someone who's a pure developer and someone who's a pure structured finance expert. If you can mesh that all together, which is always hard to get to see where things are. My favorite structured finance expert, Frank.
You only say that because I'm here. He says that to everyone. But look, I mean, I give you an example. Is in, sorry, I keep switching from hat to hat, but in my job at Cheney, we hired a junior, and the requirement was there's no way we hire a junior that doesn't have like a bit of tech background. And it's a bit complicated because you want a finance guy with some tech development. I mean, it starts to be a bit difficult, right? Like how many requirements you're making. But the reality is I don't think we would ever hire any junior that doesn't have some tech background and like a pretty heavy power user of AI, right? But to your point, the problem is they still need to learn to be able to check what they're doing, right? Because if we ask them to do something, they put in the AI, come back and send me the report, that's not greatly helpful if there hasn't been any verification. So, and by the way, it's a massive issue right now, which is how do you get junior to learn the job when they can just use AI to do it for them? And how are we going to have some sort of teaching issue, to upskill people because they just be so reliant on AI? Luckily, I don't have that issue because I had to suffer for 20 years learning before using AI. So hopefully I can check roughly what's happening. But that's a bigger issue for junior.
And I think kind of that intellectual curiosity, it's actually so important because that analytical mindset, that critical thinking, I think that's the skills of the future. And I think kind of for any developers that are listening or watching this, I think it's actually structured finance is a great ecosystem to be in. There's careers which are fantastic. We've all seen it. And I think kind of constant learning and understanding the technical nuances on there as well. Hannah, anything to add on that? Or yeah.
I just hope that the entire industry doesn't just move to vibe coding. No, I mean, if we look at Moody's, I think something we're seeing, to kind of revert back to the more credit part of this, I think we're seeing a much higher degree of sophistication in every transaction. So we're having to bring, 6 analysts to the table rather than 2. What we're doing internally is we have a huge data estate at Moody's and a very, very strong engineering team. So we're utilizing our engineers to make life easier for analysts because, as I'm sure those of you who have worked in large organizations, teams that sit next to each other often don't use the same data. So we're trying to streamline our data flows and just make life a lot easier for our analysts.
I can imagine the sheer amount of data that Moody's has access to is quite useful in our evolving world.
Yeah, indeed. Yeah, 630 million companies I think we house data for now.
Wow. Okay. I mean, that's quite impressive. So what should we build? What should be built next? So if we're bringing the online audience sort of back to the sort of actual themes that we've got, if I prompt the question again open, but I feel like Manolis should be prompted here first. If the builders in the room had another 30 days, rather than doing exactly the same sort of responses and tasks, what would you tell them to build next to make these prototypes more useful for institutions?
Yeah, I mean, to be honest, I already said that, especially the three that we're focusing on, kind of readiness for looking into prospectus and data and making sure that the tests were met. That's for a bank, I think, a really big one. Maybe one thing you could add on to that is kind of then moving on to the actual securitization, or when you're before the securitization, going to a meeting with Moody's, rating, not analytics, but that how do I cut my pool tape most efficiently? So just for everyone's background, you have a big pool tape and you have a lot of levers you can pull, like how much am I going to do my senior tranche? What rate do I put? How many, if you're in mortgages, what LTV, average LTV do I use? So you have a lot of things you can do, how to slice and dice your data. And there's so many variables. And I think that could be a very interesting use case for AI to really optimize how you structure the deal before going into conversations with the rating agencies that can improve your outcome, make your funding cheaper, and then also have a clearer sense of where the rating is going to come out at without the rating agencies and you having to go back and forth 5 times. So yeah.
Right, Daniel.
Yeah, so I think some promising things to work out the demos we saw, and what I do expect is that once we start applying AI in structured finance, what we will see is that also more in the front office at the banks, there's still some steps to take in the credit process. So if you put bad data into a transaction, then it's never going to be good. So I think you will have a sort of a feedback loop from the transactions where investors are going to be very critical and say it's 2026. You guys need to do a better job there when you issue a loan to register more data points, but also maybe the real-time data story. I think that's a good one if you want to look at credit and early warning signals. That information is available. Why are we not trying to solve the information asymmetry that's classically in finance? Why we're so close to being able to really solve that? So why are we not doing more, investing a little bit more on that side with the help of AI? So tying basically that full process from the real economy all the way to the investors, tying that together in sort of a automated, very streamlined process. That would be really nice to see. So maybe next year we'll already there, who knows? But getting there, I think. Yeah.
Yeah, I think constantly evolving. Hannah, any thoughts?
Yeah, I think I jump on the real-time data issue here, right? Because you have so many code and data repositories across these large organizations that really it should be flowing into early warning monitoring. Particularly with a lot of capital flowing off banks' balance sheets onto asset manager balance sheets, and also from insurance and the retailization we're also seeing in private credit, it's becoming increasingly important that we just work on loss prevention. I mean, that sounds like the kind of fact, right? But I think anything that we can do with AI and data to reduce losses, we should be attempting to do.
Perfect. And last but not least.
So I agree with everything that's been said. I'd just give maybe instead a piece of advice, which is my experience is finance is not sometimes just about technology. There's also a way people do things. There is a question of trust, of network. Sometimes you work only with certain people. You want to do things in a certain way because of regulation, legal, etc. And I think sometimes the risk when developing a technological solution is to kind of like fall a little bit in love with the technology and forget where is the usage and what actually people want, because they have sometimes a very unique way of working. And so what I will advise everyone as much as possible is to always talk, because sometimes maybe people in the room or people who develop have mostly a technological background, not a finance background. And they don't always know how people actually do trades or want to really look at the data. And like filtering the data, there's 1,000 ways of filtering data. And it's not like sometimes there is a best option, but the best option is not the one people are used to. And maybe you want to do the one that people are used to because otherwise it's too much of a gap. So I would just invite everyone to always be very like in touch with finance practitioners to make sure that whatever they're developing is actually how the finance people are thinking about it. And it's not easy because sometimes they're not tech people. So you might show them some things, they're like, oh no, I just continue to do my thing. So they need a bit of a push, but you need to find the right balance between the two.
Yeah, I think the ability to sort of actually embed yourself in with structured finance teams, if you're a data scientist, and actually being able to talk, listen, absorb, hear, and respond to sort of feedback, that's what's right, basically, and being able to sort of amend things. And very last point, we'll just do a very quick 30-second lightning round, I think, as the day comes to an end. So if I ask a question, 1 year from now, what would convince you that AI and structured finance has moved from experimentation to real adoption? I'm going to do it in Frank, you go first as well, and we could do it across the...
To be fair, I don't really know. I think it's more like a general broad usage of various tools. I think, as I was saying at the beginning, I'm a big believer in having workflow and specialized kind of like tool targeted to a specific usage, and seeing people. I think everyone in finance get the idea that they have to use AI. They just don't know how. So for me, that will be the sign, which is seeing more and more tools that are dedicated to specific usage, because that's how you're going to get more and more people to adopt it.
Perfect. Hannah, thank you.
I think we're seeing it being adopted already. I don't think that's the kind of next phase. I think what will be interesting to hear from the market is if we can deploy human capital in a much more efficient way, so that people aren't wasting time on repetitive tasks. And also that, of course, requires the AI to be trustworthy. But embedding things like covenant monitoring into a workflow tool, yeah.
I think, we've got to work out what good looks like and how to save time and make the right decisions. Daniel?
Yeah, I think our, let's say, pyramid is from learning to building internal things, of using AI a lot for internal processes, our development processes, but other things as well. And the last one is using it actually in our product. And I'd love to see next year that our clients are actually, interacting with an agent in some way. But yeah, there's definitely some steps to take in terms of building that trust and yeah, crossing that bridge. So next year, I hope I can report back that we have crossed that bridge, and some banks have been brave enough to, to go with us on that journey. So yeah, I hope so.
Definitely a journey. Manolis?
Yeah, and maybe from a, again, bank originator or issuer point of view, just cutting down time to go from, wanting to securitize a pool of assets to actually doing it by, I don't know, factor of half or 50%, maybe. And then again, I'm going to go back to my pool audits. It's clearly a traumatic experience, but maybe have that be a tick the box exercise. Really, I mean that there should be no question. I mean that should be an easy AI tool that you can put everything in, and they'll tell you what the audit will find, and you can fix it before the audits. That would be my dream.
Perfect. Thank you, everyone. Thanks for some wonderful panelists. I think this is a wrap.